Welcome to CSI Chat, where every topic's fair game. From finance to mysteries, we'll never be the same. Our hosts an accountant with a knack for a joke. We'll dive into the details and laugh until we choke. CSI Chat, where the numbers beat the fun. We'll explore every subject under the sun.
All right. Well, we are very lucky today to be joined by David Thomas. I'm going to give a little bit of background on David before we get into it here. But David has been involved with the Canadian business world for several decades in Toronto. He served twice as the editor of the Financial Post and was leading the reporting team at the Globe and Mail's Report on Business, which is the preeminent business magazine here in Canada. He also served as stints as the editor-in-chief at MoneySense, Marketing in Canadian Business, and as the business editor at Macleans, which again, Macleans is also another preeminent Canadian publication that I'm sure anybody in Canada has heard of. Have heard of Macleans. But the main reason why we're actually here today to talk is he is also the author of the terrific book entitled "The Fairfax Way: Inside Prem Watsa's Secret to Lasting Success." Fairfax has been around. They just surpassed their 40-year anniversary, and it was perfect timing for the book. And if you're looking to read a really good book, understanding one of Canada's top performing businesses, I would highly recommend you take a read of the Fairfax Way. And I'm just going to give a little bit of background because I know we have a bunch of people that listen who are outside of Canada, perhaps outside of North America, and perhaps you don't know very much about Fairfax. So before we get into this, I just wanted to provide a little bit of background on Fairfax, because again, it is another company similar to CSI, which can tend to fly a little bit under the radar, even for people within Canada. So Fairfax started in 1985. As I said, they've just surpassed their 40-year birthday. It was founded by Prem Watsa, and Fairfax focuses on insurance and acquisitions. And Prem Watsa remains as the chairman today in 2026, which is an incredible achievement all by itself, 40 plus years later. Fairfax is certainly on the short list of one of the most successful Canadian companies in our history. And in David's book, for people who are familiar with CSI, you're going to see a few different names that you're probably going to be familiar with. You're going to see Lawrence Cunningham quoted, and you're also going to see Andrew Pastor is also quoted. And again, it's those names should sound familiar with a company we're also quite familiar with. Now, I wanted to also share some words that's associated with Prem Watsa and Fairfax, which again may also sound familiar to many of us at CSI. Prem Watsa has been writing president's letters for 40 years. And if you actually go on their website, he actually has all of the president's letters going back to 1984 that are readily accessible on his website. And you can actually download them. I've done it. They're all there going all the way back to 1984. And they are an open and honest president's letter. In many cases, Prem Watsa is criticizing some of the decisions that he made himself. And again, they're an excellent read. Fairfax is also a company with basically no public relations department, and the CEO, for the most part, does not pick up the phone when the media calls. Again, that's a very kind of unique aspect of a public company. They have a very small head office. They are decentralized, and they are highly metric focused. And for folks that are familiar with CSI, there's a lot of similarities with our company compared to Fairfax. So I think people are going to be very interested in this conversation. So David, bit of a lengthy intro there, but thank you very much for joining us today. We really appreciate you taking the time.
Delighted to be here, and that was a good setup. There's a lot of ground to cover here.
There is. So let me just, before we get started, let's learn a little bit about you. You've got a very interesting background. There's probably only a handful of people in Canada that know as much about the Canadian business landscape as you do. You've been around for a long time. Maybe just start a little bit. How did you get started as a journalist operating in the business world within Canada?
Yeah, no, it's a couple of decades ago now, and the decision to get into business journalism was almost kind of an accident. I was trying to figure out what to do. I really wanted to do journalism, and I was looking at a variety of options, and probably inclined to do politics or something like that. And an opportunity opened up to start doing a few stories for the local editor, the West Coast editor for the old Financial Post, which was a tabloid at that time owned by Sun Media before it was bought and rolled up into the launch of the National Post. So this was late 90s. And anyway, I did a few stories and I really liked it. And, I wasn't a business person, but I really loved the challenge of working with numbers and finding stories in numbers, and that made it just, I think, yeah, again, more challenging, a little more interesting. And I figured there were a lot of opportunities. I just had my first son. I'd better get a job, and that was a good career path. So I fell into that. Started working in Vancouver with Reuters as well as with the Financial Post, and then later, a few years later, moved to Toronto and reported for a few years. Wrote on markets. Was economics correspondent, so a couple of plum jobs, right in the heart of it. And then I moved into editing, so investing editor, and then running the FP, and then Globe and Mail, and had a little stint outside. Sort of redid the investor focus for IROC. So spent a
Oh,
little
really?
time in the regulatory world trying to do some advocacy for investors at that end, and then magazines and whatever, and a little final hurrah at the Financial Post a couple of years ago, and now quite happy writing books. So that's my
That's quite
story.
the Yeah, that's quite the background. And in your background, David, is there certain stories that would pique your interest? Like in the business world, is there certain stories that kind of jump out to you over your experience in terms of ones that were most interested to you?
Oh boy, there were lots. I like to beat up on myself, so I mean, I think the one that I remember the most was Bre-X, and I came out to that was right when I started at the FP. I'd come out to Toronto, and I knew a lot about mining. I'd working on the West Coast, right? There's a lot of junior miners, and I wrote a lot on that. Anyway, I sort of stumbled in and basically cracked the story while it was still a big giant mystery, and then I, I wasn't very good at closing it. So I basically got somebody who had the information and a clear take on it, on how obvious the fraud was and how it really shouldn't have been dragging on as long as it did, because you could just look at their drill results and see that, all the gold was equally spaced throughout all the drills, and gold deposits don't appear like that. Never mind the fact that it was river gold and placer as opposed to, the kind of gold that should be where they were digging it, supposedly digging it out of the ground. Anyway, I remember that one because, I didn't really nail it. We sort of put out a bunch of question marks, and my regret is I wasn't able to push the story harder. And I think I was just inexperienced at the time, but I felt like I had the goods delivered, and didn't get that one. So that stands out. But a lot of the
Well, David, I just want to stop you on Bre-X because we need to get you back to have another chat on Bre-X, because if there's one as well that Bre-X is, again, if you're a Canadian, you probably know Bre-X extremely well. They actually just did I want to say about a year ago, they did it, and I'm pretty sure it was the BBC who just did like a 6-part podcast series on Bre-X, which was excellent. That took you through the whole thing. But that's another one where if you're looking for another book, a book on Bre-X would be really, really interesting to do. I don't, because it's still, you bring up Bre-X now and again, it's not one of those things that's forgotten. It is very much in the
yeah.
minds of Canadians, and I bet you
There
people
were some
outside of
good
Canada
books
as well,
written
right?
on it too, right? There were good books. So we got to point and give credit. Andy Willis, The Globe, and there were several books that really dug into that. So I just find it kind of funny is that I feel like I almost stumbled on it, and had someone who actually had the goods. But when you're protecting sources, and you want to try to if you don't have the paperwork or the evidence, I didn't write it as hard as I could have. But yeah, great story for Canadian
Yeah.
investors.
So, and just to give us some perspective, we talked a little bit about this before, but the change in the landscape of business news. I just get interested to get your perspective. Like, you roll the clock back 20, 30 years ago, we relied very heavily on newspapers, to provide us a huge chunk of our news. Now, things have changed. We've got social media. The newspaper industry has gone through quite a bit of change. Just give us your perspective on the change over time, and if people want to get news today on companies, from a business perspective, how do they go about doing that?
I don't know. I have probably too many thoughts on it, and you know, generally, general observation as a consumer of news, I feel not terribly well served. I feel like there isn't as much of it. I mean, it's just the organizations don't have the budgets to hire the enough people or have enough experienced people to really be pushing stuff. That said, there's a lot of people out there still doing really great work. In terms of where to look, I mean, hey, it's not a healthy industry, but there's a lot of opportunity in there for people who are being smart about it. So it's fragmented. Might be a Substack, might be a Paul Wells on politics that you're going to.
Yep.
It's harder for the established media brands. They were built on advertising, and that hasn't really come back, and it's probably not going to. So, but the Globe and Mail is still doing a great job. A lot of the other publications are definitely not as strong as they used to be.
Yep.
Substack is, going to have really good writers, but I guess you have to really look around. You have to work a little harder. It's harder to say, "Hey, I'm just loyal to this one." Used to be a newspaper, and that's where I get my news. So but I think there's opportunities. David Scott and the Logic have proven that they can really make a new model work, and I think they do really good work. Um, and there's a bunch of others. So I don't want to mention a few more because then I'll just forget about the
Yeah.
other ones and not mention those. But there's a lot of good work being done. But yeah, it was, there was that time where thump, 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 the newspapers land on your porch in the
Yeah.
morning, and it was our
Yeah.
job. We were up early and checking every story that every publication did. Where did they play it? What did they get? What did they leave out? And it was an interesting time, but yeah, that's kind of gone. It's all happening real time.
Yeah. I miss those days. There's no
Yeah,
doubt about
yeah.
that. So let's get into Fairfax a little bit now. Then again, you've been around the Canadian business landscape forever. So you must have, I'm not sure if you remember the first time you crossed paths with Fairfax and Prem Watsa, but take us back in time, obviously well before, the book came to light. But what was your early experience with Prem and Fairfax? Do you have an early story where you first kind of, talk with Prem, or you first crossed paths with Fairfax? Any stories from those early days where you kind of first uncovered Fairfax?
No, I mean, the first experiences would have been just, hearing from other people how impossible it was to actually have that time talking to him because he just wasn't readily available. And, where people want to be private or just don't see the value in talking to media, and I don't blame him at all, but it leads people to try and speculate, why? Is he just a weird recluse? Is he uh, uh, hiding away? Is he hiding something? And so
Yep.
there's always speculation, what was behind that. And I wrote early stories that were, this was late '90s, so this was in the middle of their M&A mania, and I'm sure I wrote a few of those and a few earnings stories, but I didn't do a lot. But as I think what I stumbled onto the letters and looked at Prem more as a prognosticator, as just really good calls and macro and risks and bubbles, and a lot of it was historical, but also in the moment where they were adjusting portfolios, reacting to risks in the market, whether it was Japan overheating or you know tech stocks or whatever. It was always interesting to read. I was always learning from him, and um, but I never met him until I met the company. I got invited down by Paul Rivette, who was president at the time, in about 2003, I think, just after he had arrived, and that's when they were under siege by the hedge funds
Yep.
in a big short attack. And they had finally decided, and really, I think Prem was kind of reluctant. And Paul Rivette, who had uh, um, convinced him, maybe we should open up to the media a little bit. So this was their first sort of outreach to try to tell their story a little better, because for a long time they weren't even doing quarterly conference calls for earnings, right? So
Yep.
you had the letter, and maybe if you went to the AGM, you could put your hand up and ask a question, but otherwise there just wasn't a lot of contact with the company.
So then give us some perspective on how the book came to light then. You had mentioned earlier, in one of our pre-discussions that this was actually, a long process. It certainly wasn't, something you had put together, in 6 weeks or something like that. This was a long process. Give us some perspective then of, fast forward a little bit on how the book actually came to light.
We're jumping to maybe the end of 2021 is when I actually, this belatedly answering your earlier question, when did I actually meet him for finally first? And that was to do a Q&A with him. And it was just something we were working on at the Financial Post on, the state of capitalism. And I asked a few industry legends if they might want to talk about it. And Prem said, yeah. So I was quite surprised. I thought this
Wow.
would be great. I'll finally get to meet him. And we had a long, long chat about what was going on in the world, and just got into his philosophy a little bit on compassionate capitalism, how capitalism is a great force for societies and nations as a whole. It's a way to better our wealth jointly, and making profits wasn't a bad thing. But for him, the big piece of the puzzle was also how do you share that? So you get into giving back, and how do you treat people fairly so that
Yep.
people aren't casualties as headcount in every, M&A deal, and you just sort of wipe out half the company. He sort of, he explained it, and that was 2021, but they were clear from the get-go. That they were going to create Fairfax, that they were going to continue to do all their investing, but they were going to buy insurance assets. And but when they bought them, they were going to be different, from other M&A firms, and try to keep the people and keep management. And that if they ever had to let people go, that was like a failure, you know.
Yep.
So they had some really strong principles, and I really started to understand what he was about when we had that chat, in 2021. So that was a really a bit of an eye opener, and that also became the first step in doing the book. So we started a conversation, we did a long Q&A, and then he wanted to just keep talking, because I think he thought, maybe I could translate him. I'm putting thoughts in his head. He didn't say that, but he seemed encouraged by what we were able to do in our conversation, and he thought, we should talk more, and maybe there's a some kind of book or something or whatever. And from then, we talked more. I learned more about the company, and we decided to do a book. And but it took a long time, and what that book was going to be wasn't clear from the beginning. So they had done a private book on their 25th anniversary, which is a neat little book. And But not a lot of people saw that, right? I think he gave out some to
Yep.
shareholders at the time, and certainly it wasn't public record. And I wanted to convince him that they really needed something to start putting their place in context for, Canadian corporate history. that they really belonged in the annals, and a public book would be the best way to start doing that and recognizing what they've done. So that's a long-winded answer, but it was a surprise, one, that he would even take the call to do it, and that two, he would want to talk more, and thought there was an opportunity to make this the time that they were going to finally open up, because they didn't do it before. So I got lucky.
Well, yeah, and look, I think you know, the thing with these books, there's lots of books on successful companies. There's no shortage of those, but what really stood out in your book is just how Fairfax chooses to do business, and it's kind of the backbone and the ethics of Prem Watsa. I think when we think about role models for our kids, if Prem Watsa would be high up on that list, and you don't actually appreciate a lot of that unless you actually read it in a book. You know what I mean? And it's like I was saying earlier, is that it's really important you go through and you document this stuff, because once you document it once, it's out there forever. And if nobody chooses to do that, then who knows what happens? It
Mhm.
it may never it may never come to light. You know what I mean?
Right.
Um, were there any topics that were off limits when it came to the book, David? Or was it really just the good thing with Fairfax is they're a public company, so a lot of it is out there through letters and things. But were there any topics where they said, you know what, we didn't want to touch on that?
No, I mean, the more I got to know him, and the more I realized that, principles, you couldn't take the principles out of the story, out of if you're doing a biography. And the more I learned about the principles, I kind of learned that some things were just going to be off. I mean, don't try to paint someone in a negative light, in a personal way,
Yep.
where you don't really have to. No gratuitous, no swearing.
Yep.
They've got a policy. They feel pretty strongly about that and how people talk to each other and treat each other. So I wasn't going to go in and push really hard. I just tried to soak up as much as I could. But the reality is, I wasn't muzzled at all. And as you alluded to earlier, they're very open about their
Yep.
mistakes. And that's the great thing about reading the letter, which I tried to use that throughout the book. It's based on interviews and talking to all their senior team. But I wanted to remind people what you could have learned. Here's this company that, people don't understand. Most people in Canada don't know who Prem Watsa is. If they know the company, they probably got a bad read on it and just think they're dumb investors because they bought BlackBerry. Like, there's just so many
Yep.
misconceptions to try to address with this. And it was, I thought, incumbent upon me to really kind of lay out that you could have been learning all this stuff in real time if you read that letter every year. And
Absolutely.
and they made, every time they made a big acquisition, Prem would lay out the risk factors. He would, look at the metrics, what time, what multiple of book he's buying at. So, um, what might go wrong, what the real risk was in some of those. And sure enough, some of them stumbled, some of them didn't work out, and he owned it. He would, make fun of himself. There goes your dumb chairman again, making the
Yep.
mistakes. And he would do things like, not just, "Oh, we made a mistake," but start doing calculations on opportunity costs. So I said, "Yeah, we
Yep.
bought this company. Under our stewardship, it's hit a wall. We haven't got the return, but here's what you could have made." And just almost rubbing salt in the wound, right? Is if we had
Yep.
taken that money and put it into, well, either our own stock or invested in Coca-Cola or whatever, and here's what the return would have been. We could have been up a quarter of a billion, and we bought it at 22 million, we're selling it at 22 million. I can't even remember what that example is, but that's one of them. So I think he's always teaching, right? Which is
Yep.
an interesting thing. So you're learning all the time when you read the letter about allocation and opportunity cost and uh, investor behavior. But also,
Yep.
as any investor, value investor knows, you only need a few winners, and if you get more than half of them right, you're doing well. If you get three quarters, you're laughing. So
Another question I had for you, it's because the other thing that you realize when you read the book, you first think like you even said earlier is like, CEOs that don't necessarily speak to the media, the first reaction may be, well, what do they have to hide? Or are they these recluses who, just sit in an office, with their doors closed and not speak to anybody? But then you read your book and what you quickly learn about Prem is he's an incredibly charismatic person who the people who are working for him love working for him. Like, not speaking to the media is just a choice that he had made. It is not a reflection of a behavioral trait of being a recluse. Like, were you surprised as well, David, when you first got to know Prem, that he's actually not a recluse? He's actually quite charismatic. The people who work for him love him. And he's just a different person than maybe what you had thought, when you first started covering them.
yeah, yeah. He's funny. He's got a good sense of humor. He doesn't take himself too seriously, or not externally anyway. And, the stories are legend about, how he would keep a sense of humor throughout the hedge attack, where, people were being called at home and harassed and being fed manila envelopes with false information about how their company's going to go bankrupt tomorrow and they're all going to jail. And if they don't turn around and divulge all these secrets, which didn't, weren't, there were no secrets. Um, that they'd be going to jail too, or whatever. But a lot of people just look to Prem, and he kept up his sense of humor, and he says, yeah, you do what you can do. You put your head down. At the end of the day, I sleep like a baby, and it's it's certainly an inspirational kind of leader you want to have at your company. You hear nothing but praise.
Well, the other thing you learn from your book too is that if you're out there and you're about to go into a job interview with Prem Watsa, and Prem wants to hire you, you know, you're probably going to get hired. Because again, you've got some really good stories in the book there about Prem not even having a role for some people and just talking with them about their values and things. And it seems like that's almost more important, than their specific skill set that might be a fit for the job.
Yeah, I think, and that's something you hear with a lot of very smart people running companies and investors. Warren Buffett, for sure, is you do buy companies for management. You don't want to buy something and have to run it yourself. You want to be decentralized, which is obviously a big thing with CSI. And
Yep.
but for Prem, yeah, they did well with some buying early days, buying companies and getting the right people into place. Other times it was a little bit harder. And then there were a few, as you say, instances in the book where people were hired and didn't really understand what they were being hired for. But Prem saw fit, and sure enough, they were put into good roles after being hired, sort of as stacked talent, right?
Yeah. The other question I want to ask you is the structure of the book. The way the book is structured is also unique. You might think, well, it's a bio on Fairfax, so the whole book from start to finish is just going to be a history of Fairfax. But that's actually not the way it's structured. It's kind of structured in two parts. Is one is sort of a history on Fairfax, and the second half of the book is kind of business 101, is focusing on like business principles and things along those lines. What was the rationale behind kind of structuring the book in that fashion, which again is, I think, is kind of a unique way to structure a book.
Yeah, well, one, there was a lot of ground to cover. You're 4 decades in and trying to do the
Yep.
first really true foundational biography and story. Um, in terms of audience, I think that's an important consideration, as I wanted it to be something somebody could walk into who didn't have a business background, who didn't even normally read a business book, and still have a really entertaining read. Um, So in order to do that, you got to do a lot of explaining. You can't just assume that everybody really gets the ins and outs of book value, growth per share, and intrinsic value, and the tax implications of buybacks and dividends and whatever. So, and in doing something, there's a lot of rabbit holes, right? So this is complex stuff, and there's a lot of
Yep.
context you want to bring to it. You want to help people understand, Phil Carre and Phil Fisher, and Henry Singleton, and the influence of all these guys, John Templeton. So there's a lot of people to meet. There's a lot of concepts to meet, and I kind of felt like there'd be way too many rabbit holes to go down if we really just sort of breeze through front to back a chronological history of these guys. So I tried to leave out a lot of the rabbit holes in the first half and just let the story breathe. And because there's a lot of ground to cover there, right? And then I thought I don't
Absolutely.
want to leave people hanging, so there's just a lot to learn here, and maybe people who have read the whole canon of value investing would find some of that kind of obvious. I tried to uh, make sure that, as we're explaining stuff, that we really get at what's unique about Fairfax too, and how they look at these things. And in a broader sense, we were we had a book that was trying to decode in a way to help people understand Fairfax. And I think just a lot of context that you had to bring into it.
So give us, we talked a lot about Prem. Now you can't obviously talk about Fairfax without talking about Prem Watsa. But one of the things that you get from your book is learning about Prem's background. For those that think, oh, this is a rich kid who grew up on Bay Street and used his family's wealth to start Fairfax. That's not the story here. Prem Watsa showed up on the shores of Canada, being an immigrant from India, with $8 in his pocket, literally $8 in his pocket. And maybe from there, David, take us from there. Give us some perspective on the background of Prem and those early days of Prem Watsa, because again, he really built this thing all by himself. Obviously he's got a team and everything like that, but he didn't start with a lead. He didn't start on second base here. He really started from home base and worked his way around. He didn't take any shortcuts.
Yeah, I think you got to back it up to India and his upbringing, right? He arrived in Canada. Was he 22, 21? I think he was 22. Um, and so his upbringing, he didn't come from money. He's cautious to say it's not a rags to riches. They were not poor, but they were not well to do by any stretch. His dad was an orphan who was an educator, and taught at a lot of schools and ran some very, very good schools in India. And so Prem's big advantage was he had access to a great education that his family probably wouldn't have been able to afford otherwise, right? So
Yep.
he was very well educated, and these are great schools, IIT in India, and he did chemical engineering, and then he realized he sort of had a flash that he didn't really want to do engineering, and he was going to go into business school. And was at that point, he's 21 years old, already decides he wants to get married. That his dad said, "No, Prem, you're going to Canada." His brother had already moved there with his wife to London, Ontario. And he said, "There's a great school there, a business school at Western called Ivy, and you're going to do the MBA program if we can get you in." And in a matter of weeks, they got him in, and he arrived. He loves to tell that story, the $8 in his pocket, and so he was definitely not throwing around a lot of money. He lived in a shared a room in the house where his brother was living, and yeah, didn't he had to hustle, right? Going to
Yeah.
McDonald's was like a big luxury. He he sold air conditioners and some other appliances for a guy in London during the summer, and he was just trying to make money to get his wife over and get her established and get married there. So, as far as the background, that's pretty cool. I think one thing
Yeah.
and Prem likes to tell that story. He's very active with the Horatio Alger Society. He's president in Canada, and that's all about celebrating and helping people who want to lift themselves up out of adverse economic conditions and be entrepreneurial and make good with their lives. So he's really fond of that. Um,
And he started at the bottom rung at Bay Street, right? Like, it wasn't, again, as if he jumped into a CEO spot. Like, it sounds like it was hit or miss for him even to get his first job.
yeah, yeah, no. So yeah, he did the MBA program and had two job opportunities. One of them was just an analyst at 3M, I think, and then the other one was an opening at Confederation Life in the pension administration, being an analyst. So, he had his MBA. He likes to tell the story. I had no, idea even what a stock was, but before he had entered the program, he still didn't know he was going to be running money. And, but yeah, fate, $8 in your pocket and, um, you know, not knowing which turn you're going to make. And but he had a successful, career, in 8 years anyway with Confederation Life, and then it was with some of the people that he had worked with that they decided to spin off and do wealth management, and they created Hamblin Watsa. So it was like, it was a really good, successful career, launched their own firm, and you figured, the story's there. They're going to run this firm. They're going to have a good life and make good money. And it lasted, a couple of months before he got distracted and fell in love with the Warren Buffett model of buying insurance assets, leveraging the float, and creating a big holding company concept. So he didn't have he hustled and he just found opportunities where they presented themselves, and then boom, they bought the trucking insurance assets of an American company, and their subsidiary operations in Canada, and that was it. That was off and running in 1985.
So the name Fairfax, I didn't know the background of the name before I read the book. If you just think of Fairfax, maybe you're thinking, oh, maybe it's the name of, you know, uh, one of the companies they bought on an early stage or something in the early days or something like that. But that's not the case. Tell us, David, what's the background on the name of Fairfax? Because those principles really ring true today and have probably been prevalent for the 40 years they've run the business.
Yeah. You just can't divorce the story from the principles end of it. And it's actually a challenge, it was a challenge in writing the book, and because it can sound corny, right? You just say that these guys are, well,
Yep.
I'll explain the term first. I mean, so fair and friendly was the sort of motto that they were arriving at. And that really described how they knew they were going to go out and make a lot of acquisitions. They knew they were going to buy insurance companies and other investments. And they sort of coined fair and friendly as the way that they wanted to operate and the way that people should understand them. If they wanted to sell their company, that they would be well treated and build the company together. And so fair and friendly, fair is the fair in Fairfax, and fax is the acquisitions. Um, and that was their way of doing it. And again, it can sound kind of corny. It can sound like folksy, and or these, but these are pretty serious, sharp investors and really good businessmen and really smart at buying. They just wanted to plant a flag that said they were different, and that's kind of what it was about.
Well, it's kind of cool because, a lot of things change over 40 years. I'm sure the nature of the businesses, how they analyze businesses, return expectations, lots of things can change, but fair and friendly and acquisitions, that hasn't changed, and that's, a core element of their culture that certainly comes through in the book, on how they operate during those, over those 40 years and however many years to come. It's amazing.
Yeah. Yeah.
So, and then just talk a little bit about, now you touched on a little bit, David, on the approach, but is it as simple as, for those that people that don't understand, kind of this insurance acquisition approach, which again is different than how CSI goes about it, but is it as simple as, they raise money through getting insurance premiums, they have to, and then invest it away, and hopefully the returns on their investments, exceed or are well in excess what they have to pay out in losses on their, on their insurance asset? Is that kind of at the end of the day how it works?
Yeah, I mean, generally, insurance companies would, be capitalized, fully invested in bonds and very conservatively. The float in that case wouldn't necessarily be a huge advantage, and the float being the premiums that they have written. So it's revenue that's come in, and they have to keep on hand to pay out future claims based on the premiums they've written. So they have this store of cash, and if you're just sitting in very conservative bonds, you're not necessarily working the formula that well. I mean,
Yep.
being very general here, but Warren Buffett kind of proved, with Geico was one of the early ones, but he built the firm. Yeah, a huge leg of Berkshire Hathaway is insurance. And if you're a smart investor, you can take a little more risk and you can start investing that money. And you look at it as it's almost free leverage, right? Where you have that money, you have to be prepared, you have to have it on hand to pay it back. If you don't, your reserving can feed that back into earnings later. But regardless, you get to keep what you make on that money while you invest it. And when you start looking at 5, 10, 15 years, you can do very well with it. So for a good investor, it's a really it's a really interesting model. And Fairfax has always been different from, a typical insurance company in Canada. So people have trouble looking at them as comparables because Fairfax is a lot more equity focused on their investing. Um, but if you're a smart investor, it's a really good model. I mean, the only problem with their approach is they really wanted to apply a value approach to buying insurers, and that carries a real risk of long-term liabilities, something like asbestos. And you can't just clean up that. You just have to keep feeding, your earnings are feeding in to cover your reserving shortfalls, and that can just be a painful investment. It can take a long time to turn around. They did have problems with some of their investments, obviously.
And if you were to say that, Prem Watsa is the Canadian version of Warren Buffett, would you agree with that assessment, or do you think there's actually some significant differences between the two? And maybe Prem Watsa is, although he used the principles of Warren Buffett, calling him the Canadian version of Warren Buffett is maybe not giving Prem enough credit.
Yeah, yeah, I agree with that. I mean, I don't think Prem loves it, because he doesn't wanna look like he's trying to be anybody else, right?
Yep.
He's doing something where he, acknowledges that the idea originally came from, watching what Berkshire was doing. But, there's enough difference. One, I think it's fair. I kinda went into the book and I thought, "I'm gonna dismiss that because I just don't think it's accurate, and the company doesn't seem to believe it." But you know what? There's enough parallels that it does, for someone who wants to know, who Prem Watsa is, and I get this all the time. Well, that's the first thing that I would use is he's Canada's Warren Buffett. He runs
Yep.
the same kind of model. But their investing styles are different. Their focus, has been different. Warren got into a lot more into Japan lately, but has always been sort of a America first in terms of focus geographically. And Prem, started in Canada, basically buying, the Canadian subsidiaries of US owned insurers, and they bought a bunch of them. They ended up sort of rolled up under Northbridge, which is the name of the Canadian assets. But by the mid 90s, they rapidly became, by far most leveraged to the US market. And from there, globally. So now they're in more than 100 countries around the world,
Wow. It's amazing.
and with insurance assets, but also increasingly with investment assets as well. And obviously, there's strong ties back to India. So there's another thing, yeah. And
Yep.
they're just growing. Like he sort of talked about it, 25 years ago or more as acorns that they were planting. But as investors, they don't necessarily move the needle a huge way in terms of some of the insurers, but they're in Latin America, they're in Singapore and Indonesia and Malaysia and Ukraine, and one of the bigger players in Ukraine. They never left. They've stayed there, and they're in Poland. They're in the UK. So very, very global, and the global assets continue to grow quickly. And the company loves in markets like India, where just the middle class growth, for as a demographics play, is so attractive that
Yeah.
it'd be very interesting to see what the numbers look like in another 10, 20 years.
Absolutely. Your book is loaded with great stories, David. There's tons of them that are buried in there. However, one of my favorite ones is when they're just about to start Fairfax. I think Prem thinks he's got all his capital lined up, and all of a sudden, one of the investors turns to Prem and say, "We need you to put in. You need to have some skin in the game here. You need to put in 100 grand." And for someone that came to Canada with $8 in their pocket and is just getting started, and again, we're going back to 1984. 100,000 of after-tax dollars is a lot of money, especially when you've got other commitments as well. Take us through that story, David. How did Prem, how did he first react to that? You need to come up with 100 grand, and how was he able to pull that together?
Yeah, that was sort of the end of really hectic, tumultuous initial financing to raise the money to buy Markel, which was the trucking insurance subsidiary that became the start of Fairfax. Yeah, it was a scramble. It was a scramble from the get go, and they ended up raising closer to 10 million, I think, after everything was done later, but they were looking for about just 5 million and change. And um, his network was really good. He got a lot of people lined up, and then uh, he couldn't. He couldn't close it. The banking end of it. So he had personal investors and a good network set up, but CIBC backed out of helping. And he finally, after months of just running around knocking on doors, called his former colleagues at Confederation Life, and they ponied up money at the end and helped them clinch the deal. And it was John Watson, who was his former boss, and who said, we're going to stand by the deal. And but at the end, he said, I think they had enough money to make the thing work, but he threw it back at Prem that he needed some skin in the game. He needed some money to lose. It's not enough to scramble around and raise money for people from people who believe in you, but you're gonna have to get in there too. So that just wiped out his RSP and all the savings that he had managed to put together, and but it worked. Yeah.
No, when you go through that whole story of how of the initial financing to put Fairfax together, it just shows you that there was certainly luck involved in all this too, right? One bounce goes the other way. And who knows how things would play out differently. But even the most successful companies, there's still an element of luck and in terms of those early days. Would you agree with that, David? That the luck played. Now, Prem may have been successful in something else, but Fairfax's early days, getting that initial, like you say, 5 million bucks together was certainly an exercise.
It is, and you hear it from Prem over and over that he likes to acknowledge. He has his gratitude stories, and the humility really comes forward, and he never says, "Oh, so great, I did this." It's all like the people around you. It's the network that you build that made that thing work, and for him, he's got so many of those little stories, and it's he went through an MBA program and had never heard of Ben Graham, so it was getting the job at Confederation Life, and even getting that, there were 4 people in the running, and 3 of them didn't show up. So he says, "Well, they just hired me. I was lucky," and his boss turned him on to Ben Graham, and that changed his life. It changed his thinking. So here he was, he got his job at Confederation Life, and everybody else is trying to get jobs at Gundy, and where they're gonna get paid a lot more money, and working on Bay Street. He got a job at a different kind of shop that was, a little less cachet, but he got the education of his life, and learned, that shaped his thinking as an investor, and, so yeah,
So
all humble
then,
stories.
yeah, no, it's that those early day stories are terrific. And the thing is, again, I go back, if you never take the time to actually document those, they may die in history and no one ever knows about it. You know what I mean?
Yeah.
But you put the book together and that story will live forever, and I just think it's so cool that when you document and you put it out there in your book, that that story will always be there. You know what I mean? And I just think that's a cool thing.
I hear you.
Um, so some elements of Fairfax. Give us some perspective on decentralization. What does decentralization mean at Fairfax, and why has it been so core to their success?
Yeah, you think, and again, there's lots of examples of, Warren Buffett, who's explained his strategy over time. It's like, you just don't want the work. Warren wanted to sit in his office and read financial
Yeah,
documents. He didn't wanna he didn't
that's
wanna
true.
be the
Yeah.
CEO or check on what was happening at pick a company, uh, that they had bought. And, for Prem, it was the same thing. They wanted to concentrate initially. They thought they could spend all their time on investing, and that they could leave the insurance to smart people in insurance. They found that sometimes they needed a little more attention. That decentralization could harm you if you don't have the right people in there, and they ran into some real troubles, including at Markel. Their first acquisition. Um, and there were other examples too. So they learned to build a lot of processes in where they were monitoring, that they had early warning, that they had a lot more communication, a lot more accountability, while still leaving people alone to run their own show. And I think that balance that took them a long time to figure out how to do that, right? How do you leave people completely alone, make them accountable, make their own decisions? Every company is capitalized uniquely. Every company that they bought was had their own CFO and their own back office, and so they weren't trying to synergize all these different operations. They really wanted them to run on their own, because those companies will know better how to grow organically. It shouldn't be top down. But again, yeah, I think there were a lot of lessons to be learned along the way.
Next one is the public relations department. Now, again, you've worked in the media for years. And like you said, it was very difficult, if not impossible, to get time with Prem if it meant that it would end up in a newspaper. And I'm just wondering your perspective now after kind of getting to know Prem and understanding maybe his rationale and everything. Do you think it's the right answer to go with a no, zero public relations, or do you think that there's maybe a happy middle point? Give us your perspective on just learning, spending some more time with Prem and maybe, and again, someone who's worked in the media for years, their entire career. What's the right answer when it comes to a public relations department?
Yeah, I think you don't have to really uh, want to do. You don't have to do a lot of media. A lot of companies maybe spend a lot of time on stuff that doesn't really help people understand their company. But you gotta share something. The disclosure's there. They probably disclose more than anybody in the annual report, etc. But um, I don't know. I don't want to criticize them. I would say Prem learned the value certainly during the hedge fund period of opening up. And there's like one great uh, big feature in the ROB magazine in 2006 or something like that. And he just sounds like an ordinary guy, but the writer's saying, why are you opening up now? And Prem just says, ha, you just got lucky once in 20 years. Um, I think what you want is to have them, occasionally open up a little bit and not wait for the next hedge fund attack. But,
Yeah.
I think they've been a little more accessible. But I was still surprised that they answered the phone when I kicked that idea, in 2021 on just doing a state of capitalism discussion. I thought he'd be a really great guy to talk to, and he probably won't talk to me, and he did. So, um, yeah, people maybe invest. I guess what I'm trying to say is a little too much in media relations, and it doesn't necessarily end up, really doing a lot of good. But you gotta talk occasionally, and they do. You know.
Well, look, you might say, well, he doesn't invest in media relations. However, those president's letters and calling it a letter is almost an understatement of what it is. I went back to 1984. I think maybe in 1984, I think it was maybe 2 pages. Maybe you'd call that a letter. But you look at it in 2024, it's not a letter. Like, this is a comprehensive review of the year. You know what I mean? And if you're looking to understand what's going on in Fairfax, you're probably going to get a lot more from reading this letter. And not many, CEOs would actually go through and provide that level of insight. So these letters, in my mind, again, certainly something that would be done in order to kind of compensate for the fact that, again, maybe they don't speak to the media as much as others. But give us your perspective, David, on the letters. How did they start, and how did how to do something consistently for 40 years as well is not that easy. And he's been doing these letters consistently for 40 years. Give us your perspective on those letters.
Yeah. Well, I mean, first off, with the first letter, they really kind of laid it out and said, you know what, this is where we're going to talk to. This is where you want to come to learn what we're doing, why we did it, is it working? So we kind of made a promise to shareholders that this was going to be the forum to learn. The first one was only 1 page. They're now running 30 pages, and yeah, they're dense and meandering and just in a good way. I mean, they just cover
Yep.
so much ground in explaining everything. I, it is it is all really there in terms of understanding the company, but that's a lot of reading. You can't expect everybody to if they're trying to figure out what how Prem feels about a certain something. Are you going to read 40 years of letters and try to get every reference? It was kind of cool, actually. Larry Cunningham, who's obviously well known to CSI, wrote that
Yep.
book, Dear Shareholder, and it's subtitled, it mentions Warren Buffett and Prem Watsa. So obviously these are two of there's a lot of really great CEO letters, but he singles those two out. And that was a real surprise. I didn't even know that book had been written until I started digging into this. But Cunningham does a really good job of picking out, how to read these letters. So it's a good guide to what you can get out of them. And I certainly like the whole story. I wasn't quite sure where we were at in this story when I started looking at them in 2022. And the first thing I did was read back, 37 years of letters. I read them all forward
Yeah.
again. A lot of companies, it sounds like they're going to be a big deal and they disappear. Other ones don't sound like a big deal and they become a huge part of it. And I just kept reading that, and it allowed me to piece together the story, right? Which was, how the company gets launched, goes on a an M&A tear, and becomes a stock market darling, gets indigestion, and has a lot of trouble, fixing a lot of those companies for a long period. Gets in trouble uh, with a macro call on hedging in the 2010s, where they were, I mean, they'd done well in the past, very well. They were so good at calling bear markets, right? And they'd end up making a lot of money on them. But 2010 to 16, they were really worried about the aftershocks of the financial crisis, and that deflation was going to take hold, and the debt loads of, got the pigs in Portugal and Italy and Ireland and all the other ones. Um, so the letter, makes all that clear, and it allowed me to sort of figure out this thesis that something was going right, and they stopped doing some of the bad things. They got the companies into good shape. They stopped the hedging. And then it's 2017, and just reading each of those letters, you can see uh, the transformation starting to take hold, and they're getting more and more serious about doing their own buybacks. They're starting, they made their biggest acquisition in 2017 for Allied, but otherwise they're really just concentrating on organic. It's not going to be an M&A, party anymore. They're going to grow organically now, and they start, retooling the value investing strategy too. So they're still making these big, crazy macro bets, but most of them are centered on themselves. So whether it's the buybacks, whether it's selling parts of companies, I called this the big long, as opposed to the big short, because they were betting on themselves in the long run. They thought their stock was the cheapest thing out there. And it's not just buybacks, but selling parts, IPOing companies and selling it. Um, Doing this swaps investment, total return swaps, which was super cool. This is going to COVID to 2020 was when they put that on, but it allowed them, because they'd spent all their money on buybacks and didn't have cash on hand. But how do you invest in yourself when you've been buying back stock and you don't want to borrow from the bank? You turn around and buy total return swaps, which allow you to participate in the gain of your own shares. So again, you're assuming that stock's going to go up, and they were right. And I don't even know what the count is now, $3 billion up on this one trade.
Wow.
So there's so much good things happening, and they're there in the annual report, but you got to find them. So
Well, I think the other thing it does when you read a lot of those letters and you read your book, it redefines, how you think about the long term. It gets you much more focused on the long term, because clearly that is what Prem is focused on, is, not what's going to happen necessarily in the next 12 months, but it's a much longer outlook in terms of, the future of the company. Um, the next thing I wanted to touch on, David, which was really interesting, is, when Fairfax was under attack by by the shorts, back in the early 2000s. Give us just some perspective on how that, on what happened there, and how that kind of, how that situation sort of unfolded.
yeah, it's the company, this was acquisition indigestion, right? So they had just literally binged on acquisitions through the 90s, and held up, 1999, and then all of a sudden they've got to clean up a lot of them. Some of them were pretty big. Crum and Forster was one of the big acquisitions near the end. There were some that were in a real mess. One called TIG, TIG, but Crum and Forster, I mean, it was somewhere 650 or $700 million. I don't remember the exact figure. And these things were getting pretty big. Like, they started the '90s buying companies that might have been 50 million, and then 100 million was huge. And by the end, they're edging up toward a billion. And their finances just, they were stretched. They had to keep feeding a lot of their earnings, into companies that were, still vulnerable to asbestos and or employee insurance and other kinds of claims that still hit. And the hedge funds watched this, and what complicated it or exaggerated it, I think, was going public on the New York Stock Exchange. So, as I said, by now a lot of the company is U.S. based, so they want to have a listing that helps promote those assets there, just for visibility. Access to capital is a good idea too. Um, and but all of a sudden, people are taking a good look at them, and some people think, these guys look vulnerable, and they attracted. There was a equity research being written by somebody who got in trouble for it later, and working in cahoots and showing it to the hedge funds. But anyway, a who's who of hedge funds got involved. Dan Loeb, Sender, Jim Chanos participated as well. So here's the guy who uncovered the fraud at Enron, and now he's saying, "We, we I agree. I think that Fairfax is a big fraud." And there was a real concerted, underhanded and in some ways attempt with a lot of false research and just a lot of unscrupulous activity. So it was a really messy time for them, and it was several years for them to finally escape it. Initially, the reaction was to do the things that they probably thought they should do anyway, and that's rebuild their financial strength so that nobody would be looking at them, right?
Yeah.
They IPO'd some companies, Odyssey and Northbridge, the Canadian assets, and they got a really good price for them. And all of a sudden, that gives them the latitude to go back to the market if they need to go. And it's cash in hand. Plus, now they've got access to liquidity if they need it. They did big bond underwriting for Crum. So they raised as much money as they could. They did equity financings, but they were still really tight. So it was touch and go. A lot of people thought that the hedge funds were right, and that Fairfax was in trouble and vulnerable. And once the debt rating agencies start, raising questions about your finances, that can quickly spiral.
Absolutely.
And so that went on just a number of years, and there were periods where everything looked okay, and then it wouldn't go away. And in 2006, it all kind of shook down, and Fairfax finally, you talk about reluctance to talk to the media. Prem really did like a low profile, and they didn't want to get into lawsuits, and they just thought, well, we'll do the right thing, and it'll work out, and they'll get bored. The hedge funds will get bored and go away. And in the end, they had to launch a $6 billion suit against the hedge funds that allowed them to put out all their allegations in front of the public. And suddenly the media was getting another side of the story, because they hadn't really heard from Prem and Fairfax that much. So it was touch and go. It was crazy, and it does play out like a movie, and it's one of the wildest parts of the book. I mean, I think Prem would rather just close the book on some of that history. And just he's moved on. But for people who don't know the story, it's really interesting to go back, because it was pretty wild.
Well, and look, it's one thing to take shots at the business. It's one thing, but when they start taking attacks at you personally, and going after make allegations about, the church and things like that, that Prem was involved with, like these attacks got quite personal. And that's shocking to some degree that, that they would go to those lengths in order to kind of trying to prove a point at the end of the day.
Yeah. Well, I think they just thought it was so weak that if they had a few stories get out into the media, that they would just push them into the grave. And the longer it went on, I guess they just got a little desperate. But
And
yeah,
do you think there was a straw that broke the camel's back in terms of Prem saying enough is enough? Like, do you think it was the personal attacks or anything like that, or do you think it just got to the point where again maybe enough people got in his ear and just said, "Look, Prem, we've got to do something different here. It's just not working."
yeah. I mean, they had several years of having those conversations, right? At what point do we do something? What do we do? And it took until 2006. And one thing was interesting for me, and just talking to the lawyer who acted for Fairfax on the detail, because they were both running intelligence campaigns and in pubs listening to conversations, and it's crazy, almost spy caper stuff in some instances. But I think to answer the question, why then, they were they were worried that the hedge funds were getting super cocky, and that they were talking about having a big party,
Yeah.
and that Bob Dylan was
Yeah.
hired to come and sing at a party in the Hamptons, and that they were
Jeez.
going to be that all these news stories were coming out in July, and that it would essentially be the death of Fairfax, and that they could have this big party in the fall. So as they heard that, and they realized that these stories, they didn't know what was going to be written, but that some new stories were coming out um, with maybe questionable facts, that they'd better react. So at that point, it was the lawyer going to Prem and saying, you know what, I think, shouldn't we do something? And Prem said, yeah, let's launch our own suit.
Yeah, well, there's a movie right there in terms of that whole process for sure. That whole chapter of the book, you could definitely carve that out and put out a separate movie for sure, just in that whole chapter. Um, the last point to talk to you a little bit about, David, is when you've had someone like Prem Watsa who's been successful for 40 years and has headed Fairfax, it's kind of a bit of a catch-22. It's great that he's been successful for 40 years, but then you run into the problem as everybody, you age, and there comes a point where you have to talk about succession planning, and probably the longer you've been around at a place, the more of an issue succession planning is. And we've got lots of Canadian businesses out there. We're not going to quote any of them, but clearly it's an issue for a lot of Canadian businesses on the issue of succession planning. Give us your take, David. What's the approach at Fairfax? How are they going about trying to figure out who's going to replace the irreplaceable Prem Watsa?
Yeah, founder's dilemma, right?
Yep.
For anything, whether it's a private company or whatever, and you can't replace him, but they've raised a lot of talent through the system there, and they always hire from within. And they've got a president, Peter Clark, who's sort of been groomed as CEO in waiting. It's all kind of come together again in the late teens. I just keep looking at, it's almost like this current chapter began in 2017 for Fairfax. I think obviously people were getting older, and
Yep.
they've made a concerted effort to stockpile a lot of younger talent. People there, they measure retention in decades, not in years. It's just,
Yep.
it is phenomenal. Prem will run a page usually in his letter, and it shows how long, the tenure of all the senior executives, the presidents, CEOs that are running all the companies. And, it's like 10, 20, 30, 40 years.
It's amazing.
People don't leave. So they've had people in there long enough now to develop some real experience. They've been through the trials together. They've absorbed, the learnings. It'll be a slightly different company to run in the future. Not not doing all the acquisitions, that they did in the 90s. They're still going to do it, but they want to do bolt-ons now. But yeah, between on the insurance end, huge efforts to bring new blood in there and to rotate leadership, and on the investment side, with Wade Burton is now leading. They've got Roger Lace, who's been around there for 50 years with working with Prem, but the younger guys, Lawrence Chin and Wade Burton, and they've got really strong depth in terms of the big chairs. What are they going to do with his? They've made a clear plan in the last year or so to have Prem's oldest son, Ben, take the chair role. And Ben has already taken the chair role at Fairfax India, a major subsidiary, publicly traded. So it's another one that people watch.
Yep.
And Prem has said he'll come in and take my role. It'll be non-executive chair. Christine McLean, his daughter is also on the board. So again, these would be the children as stewards of the culture, but not ever in an executive role, and that they figure they've got the team and in place to take care of things. So it just comes down to when Prem would step away, and I don't see that happening anytime soon. So, but you got to be prepared.
The other thing that makes Fairfax a little different is their dual class share structure. Are you a fan of the dual class share structure? Clearly, when you're under attack from shorts, having a dual class share structure makes a lot of sense because again you can kind of focus the growth on the long term. Now again, you've got rating agencies on the side, which can certainly cause issues for the business. But when there's when there's that sort of chaos, having a longer term focus on this dual class structure makes sense. What are your thoughts on the dual class structure, David? Are you a fan of these arrangements?
If you have a really good founder, and to have control is important. Warren Buffett, just the whole holding company, never mind the voting aspect, is something that smart investors love because they want to be able to think long term. But yeah, no, there's lots of examples of cases where it entrenches poor management, and you don't necessarily get the great returns. Once upon a time with Henry Singleton, people did holding companies because you could attract a higher multiple. Now there's a discount, on the value of your assets. So as an investor, if you're patient and you have someone in there who's doing the job that that leads to great performance, it's a good idea. Prem always made it clear unapologetically that they needed control to make it happen, and that you should let people work that. They don't have dual class shares. They don't have trading in the multi vote shares. So those were founder shares. So for average investor, you don't have to choose between A or B shares, that kind of thing. But we'll see how it works. They diluted it down. They used to hold a huge amount of the multi shares and multi voting shares, and those were diluted by equity issues over time. So Prem actually had to revise the structure to keep the control back in. I won't say the year because I'll probably get it wrong, but in the teens. So going forward, you're going to have a family trust maintain that control position, and who knows if that gets diluted over time or where it goes. Again, big parallels to Berkshire Hathaway, and we'll see. I mean, he's sort of entrusted his kids with their charity, their holdings to give it all away, but we'll see. It's once you're gone, and the family, though, the kids are adamant that the culture is going to endure, that that the way the company's run is going to stay the same, and the family control is going to be a big part of it.
Yeah, it's so hard because if you look at, number one, for a company to be as successful as Fairfax has for 40 years, you're already on an island. There's not many companies that have done that. And then to say, to try and build a succession plan that is going to last another 40 years is just such a challenge, and and I know, like, you just, in your book, you look at the amount of time that Prem obviously spends on succession planning. It's probably the number one priority that he has, and the amount of reading that he does. And I'm sure as he reads through everything, it's almost like the odds are stacked against you. You know what I mean? It is just so difficult to try and, to try and do it for another 30 or 40 years. But
Yeah.
but if there's a company that's going to do it, it's probably Fairfax. So yeah.
Well, it's funny. That was one of the, it took a while to really, to get a green light in doing the book. But one of the things he mentioned later was, it's inevitable. And this is in the book, where he talks about that somebody, even on our own board, is going to push at some point and say, hey, let's get
Yes.
synergies. Let's push these two
Yes.
companies together, or let's
Yes.
just have one CFO for all these firms. And his hope is that, the culture is set, and that there'll be the institutional memory to say no. But he figures that's inevitable, and maybe reading the book will help people
Absolutely.
see what worked before. On the other hand, if the founder's gone, yeah, it depends how well your shares are doing, right? You ask people if the control really was a good idea in 2014 or something, you might have got a few more grumblers than today. Anyone who's sitting on a five-bagger in the last 4 years, that's that they're probably pretty happy.
Absolutely. No, and that example you have in the book is bang on. Is you have a new leader come in that is focused on the short term instead of the long term. And I think that's where you get into, oh, well, we need to centralize things. We need to, quit pop in profitability, because you can certainly drive up profitability in the short term by centralizing functions and bringing them together. But the long-term impact on the culture is not, is significant. And that example you raise is a perfect, that is the example that probably keeps Prem up at night.
Yeah. And
So
some of the, Peter Clark talked about this, and just w- what would have happened if they didn't have control when some of the assets struggled. And the typical response and the pressure would have been to sink them, write them off. Got to
yep,
fire everybody, put it
yep,
into runoff, and move on. And you know, Prem wanted, well, he didn't want to let people go, but also he saw the value long term, and he's, if anything, that might be, your strength can be your weakness, but for him, patience. Um, you know, yeah, he could have held on to things longer than he should have. I don't know. That's for some people to say. Um, but even the current CEO of Crumb said, any other CEO probably would have put my company,
yeah,
put a bullet in it, and the same thing with a bunch of the other assets. So yeah, the holding company, the control structure is so much a part of being able to actually execute with a long-term vision in mind, right? You can be a
yeah,
lot more patient when shareholders aren't screaming at you because, you know, they can just wait if you've got control.
absolutely. Well, for those that are listening, again, the book is The Fairfax Way: Inside Prem Watsa's Secret to Lasting Success by David Thomas. Would highly recommend people take a read of it. David, last question for you. Is there another book after writing this book? Is this something you would want to do again, or is this kind of a one and done situation? What's the perspective from David? Can we expect another book in the at some point in the future?
We'll definitely try to cook something up. I've got a few projects going, and no, I'm happy being out of the newsroom and just picking projects now. And I have a good list of things that would make good books.
That's awesome. That would be great, especially hopefully, again, the fact that it's is Canadian is certainly something that makes it interesting as well.
It was a big
But
gap. Yeah, I was really happy. I was really happy to write something that people hadn't been able to get inside before.
absolutely. Well, you had to earn your way in, right? Like it wasn't an accident that it's Prem's only going to let people in after they've kind of earned his trust, and it's clear that that you did that, and you earned the right to produce a great book. So congratulations! It's a terrific read.
Thank you. Thank you.
Well, David, thanks again for taking the time, and hopefully again we'll chat soon when your next project comes to light. But thanks again for taking the time today.
My pleasure, Scott. Thanks so much.